Question from Jag. She says, Michael, how were you able to eventually retire based on capital gains? What's the cash for living expenses coming from now?
So the capital gains were the early years. I paid off all those properties. Like I said, I started working at 15. And when I got my job at Nextel, I went from making $35,000 a year in retail. I used to sell ladies' shoes at Nordstrom, and went to making 75,000 at Nextel. And then of course, when Nextel took off, I was making really good money, but I never stopped living like I was making $35,000, $40,000 a year. And I did that for many, many, many years. And so I was pocketing a lot of cash, and I was paying down those mortgages when I was very young. And I mean, if I had to do over again, I probably would have bought more real estate, but I didn't know. I was looking in Montgomery County. I was looking around area where I live. And basically what happened was I decided that was not the path for me. I was not going to invest in the area where I live. The property values were way too expensive, and I didn't make enough money to justify it. So I just paid off the principals on the properties I had. And so by the time it came time for me to do my own converting those properties into 1031 exchanges, it was years and years later where I had a ton of equity in there. So I flipped all that into cash flow income.
And we talked about how the rents, and we just talked briefly before about sometimes when you have issues and you can't rent out homes as quickly as you want.
Right.
And we mentioned how we reduce rents. A couple of things we should point out. What Michael's talking about is reducing those rents from what we initially marketed them at today, or when that happened. We'll reduce them a little bit if we need to, but that's still way above the expectation of where the rents were when Michael invested in the properties. And that's because
substantially. Yeah, I think on that one of my very first rental properties, I think I paid like $117, and we were getting like $1,100 or $1,200 a month rent. And I think we're up to like $1,600 or $1,700 now.
Yeah. So when you get in early and you let this asset, I say appreciate, I mean, let this asset mature, right? All 5 profit centers, you can wind up 8 years down the road, just like Michael, and your lifestyle can be supported by it.
And Greg, just to tag on to the end of that, when I sold those properties, I was able to pay cash on those 1031 exchanges. So I created cash flow income. My goal was I wanted cash flow income in my 50s so that I didn't have, so it wasn't the capital gains that I'm retiring on, it's the monthly cash flow income.
There you go. So it's not cash flow immediately when you purchase a rental property portfolio, it's cash flow growth. It's cash flow when you need it.